Well, welcome back to another edition of the Real Life Finance Podcast. I am your host, Ben Juergens. Today, I'm joined by none other than a good colleague of mine, but also a good friend, Jamie Hermann. So, Jamie, thank you for being here.
Well, thanks for having me, Ben.
Yeah, so, Jamie, your title is you're Regional Manager for Community Development Lending, and which is a mouthful, but at the same time, you do a lot of great stuff, right?
I think so.
Yeah, so for those who don't know, community development is a branch of the bank that focuses on helping our communities, doing CRA work, which is the Community Reinvestment Act, and piece of that is what you do, Jamie, as far as helping people a lot of times obtain their first mortgage ever, right? That's an exciting thing.
Yes, it is. So basically what my team does is we work specifically with that first-time home buyer who's got limited understanding of how the process works, where we can walk them through a plan, get them started, and get them on that journey to homeownership, and kind of step by step with them down the path until they actually become homeowners.
That's good. And so many people fear the buying of a home piece, right? And it's one thing, it's the American dream as it's always been called. I'm sure you've talked to a lot of people. I've talked to a lot of people that think, I just can't do this. It's not, I can't afford this, whatever it might be. Can we kind of demystify that today of is it possible for more people than they would think?
It's absolutely possible. And to your point, most people just don't understand it. And there's not a good education piece out there. So there's nothing out there explaining to that first-time home buyer what they can qualify for. Again, I think everybody knows probably the biggest myth, or probably maybe doesn't know, but the biggest myth is that you need 20% down to buy a house. That's just flat not true. You can get into a house with much less out of pocket, and in some cases, zero out of pocket. So there's a lot of different loan products and a lot of different down payment assistance possibilities that you can explore. And that'll get you to where you can get into that house, get it more affordable with less money out of pocket.
And just make sure our listeners heard that. You said little to possibly zero down. I mean, that's inquisitive. Good thing back when I bought my first home, I'm like, man, I wish I would have known about the stuff that you guys offer now. I remember that was a scary time. I took my mom with me and I signed this giant stack of papers, and it's intimidating, but the ability to build equity and have something that you can call your own, that you could make a profit on down the road is a great thing. So, and rent's not getting any cheaper, is it?
No, sir. Not at all.
Yeah, exactly.
You can typically buy much cheaper than what you can rent.
Yeah. So I think that's what we want to kind of start is that dream of home ownership, right? First-time buyers may be scared, but banks can help them, right? And I think the key piece of that is meeting somebody and developing a relationship and just being honest that tell them what you want. Would you say that's a fair statement?
Yeah, absolutely.
Okay.
So basically, it's a matter of meeting with a lender, somebody who's knowledgeable in that first-time buyer space, somebody who's got considerable amount of knowledge when it comes to down payment assistance, because there are so many programs out there, and each program is tailored a little bit differently. Yeah. So it's one of those situations where you can sit down with a potential borrower and kind of feel them out for what their goal is, what they have, what they don't have, what they need, where their income levels are, what they can afford, and which plan fits best for that borrower to get them into that house.
I think that's good. And I know a lot of people love going online and applying that way. But to me, you don't get the benefit when you meet with somebody and they can understand you and your situation. They can find what is the best opportunity for you. And I know you probably still have a relationship with a lot of the people that you've done loans for, right?
Without you can't.
It's hard to talk to your computer, right? Yeah. And when you have questions, right?
I had a young lady called me yesterday, and when I say young lady, she's about 72 years old.
Yeah.
I did her first-time home buyer about 7 years ago. She's still in the house. She still calls me on the anniversary of her, when we closed on the product.
No kidding.
Hey, still here. My grandkids are living here now. We're having a great time. I got invited to her grandson's birthday party yesterday.
No way.
So, I mean, yeah, you do form a bond with a lot of these folks. So,
and I think that's what banking is all about, right? And relationship building trust, and the more they build trust with us and them, vice versa. It benefits both people and both parties. So let's talk about being a first-time home buyer, Jamie. I know the program used to be called the Home Ownership Opportunity Program, or HOP, and now they've changed the name to Launch, which is something that we offer and some banks offer. So can you kind of break down? We use a lot of acronyms here at banks. So what is Launch and how does it benefit someone?
Okay, so Launch is a program offered by the Federal Home Loan Bank of Indianapolis. As a member, we're allowed to participate in that program. And it is a product that's designed for low to moderate income first-time home buyers. If the borrower qualifies for that product, they can get up to $20,000 in down payment assistance, which again, that's where we're talking about the
20,000.
problem, right? Where do you get the money for the down payment? Where do you get the money for the closing costs? And how much do I have to actually put into this product? With this program, the borrower would have to put $500 of their own funds in the transaction, which typically is what they're going to ask for in earnest money.
Yeah.
So the earnest money goes in. If they qualify for the product, and again, on a first come, first served basis, if we can get them in line to get that, that's a $20,000 forgivable grant. So if they stay in the house for 5 or more years, that grant's forgiven and they never have to pay it off.
All launch-assisted loans are subject to a retention agreement.
So you kick in 500 and get up to 20 grand.
Yes.
Now, so that's just blows me away still today that that's possible. So for listeners that may not know what earnest money is, can you explain what that is?
Sure. So when you make an offer to purchase a house, you're working with a realtor or for sale by owner even, but it's kind of a good faith payment to the seller saying, hey, I'm really interested in purchasing this house. I'm going to give you a deposit on it. Typically a refundable deposit if financing falls through, something like that. But it's a good faith payment to the seller. It's either held by the seller or by the title company, and then that's applied to your loan. So that would count as their $500 contribution to the property.
Gotcha. Perfect. So you think about when we talk about loans and deposits here, when you put 20 grand down on a mortgage, that's going to reduce your payment by quite a bit. And
absolutely.
How much would you have loved to have that when you bought your first home? I know I would.
Well, when I bought it, that would have been a quarter of the price of my
I know,
house.
right?
But,
exactly.
Unfortunately, housing is a little more expensive now than it was a few years back when I bought my first house. But yeah, to your point, it makes it affordable. It really, truly does. So if they qualify for that product, that's great. And what people don't realize is you can take that product that you qualify with Federal Home Loan Bank, and in certain markets, there's other down payment assistance that you can layer with that. I've closed several with the launch formerly and hot before that with Hope of Evansville, which could give to another $15,000. So you could realistically get $35,000, $40,000.
That's amazing. And you know, we're in a lot of states, right, in the Midwest. So I'm assuming there's places in all those markets, or most of the markets at least, that have some additional funds available. So you combine these things. You're talking about significantly reducing the amount. And as home prices have gone up, especially since COVID, right now it seems to make the dream of home ownership more affordable.
In our market, I think we do some great things and we have some great products. I'm fortunate enough to work with a lot of lenders throughout our footprint and see what other states have to offer. And I've seen some ridiculous, hundreds of thousands of dollars in debt, to where it makes it so affordable for the borrower. And typically they're forgivable grants. They don't have to pay them back.
So stay in 5 years typically, and that can go. That's amazing.
Yes.
That's amazing. Well, let's talk about, because I know there's other programs that we offer at Old National to assist home buyers, right? So one program that I really love is our home manager program.
Yeah.
Once again, I didn't know this was available when I first started here 25 years ago. Can we tell our folks, what is the home manager program at Old National? Absolutely.
So the home manager program is a product that we designed here at Old National, actually a few years before I started with the bank, that we've tweaked over the years to make it probably the best product I've seen. I don't know any of our competition that can even touch it. But when you look at it just holistically, it's a mortgage product for low to moderate first-time home buyers, low to moderate income first-time home buyers. And with that product, we require the borrower to have $500 of their own money in the transaction. That's the same $500 that they're going to use for the launch. It's not an additional $500. So it's a one-time, as long as they've got it, that's in there. So we've got a minimal down payment. The product carries no mortgage insurance, and that's where it's really unique in a mortgage. Typically, if you purchase a property and you put less than 20% down, then you're required to pay private mortgage insurance.
And that's the PMI figure that everybody hears about, right?
Everybody hears about it, nobody knows what it is. It's a security for the bank, does very little for the borrower, it does nothing for the borrower. It helps us, but it does reduce the amount of house they can buy because it gets into their...
Because that goes into your payment, right?
Absolutely. Yeah. So if we can offer them a low down payment, no mortgage insurance, and a below market interest rate, typically when you get something, they offset it with a little bit higher interest rate. Old National goes the other direction. We lower the interest rate. We truly are trying to create a product that is going to benefit that low to moderate income first-time home buyer, get them into the house, make them homeowners, start with this is how we start the generational wealth, right? So create that piece for them. And it's just an absolutely wonderful program. It's offered throughout our footprint. All of our loan officers can offer it. It's not just our CRA lenders. So anywhere in footprint of Old National,
awesome.
we can get that.
Well, and I think that's a key piece that you mentioned, this PMI piece, right? It's an acronym that most people don't know about, or they don't know how to get rid of it too. So some people will get to that 20% of equity, but may still be paying the PMI going forward, right? So at that point, when they get there, what can they do to get that stuff taken away once they get there in a traditional mortgage?
So in a traditional mortgage, if you hit that 80% loan to value, where you've got 20% equity, you can petition to have that mortgage insurance removed. If it hits a 78% loan to value, it'll automatically go away. But you've got that little bit of a window where you can get rid of it before it hits.
I remember writing the letters, and I had to be a little persistent, but it worked.
Yeah,
and
absolutely.
People are happy on saving bills, right?
Yeah.
And let's save on some money. So with the home manager program, like we've done talk on credit scores and things like that. What does the bank look at? And do you still need to be like a 6, 7, 600, 700 score, or what do we look at?
That's the other big myth. Everybody thinks you have to have a 780 credit score to get a mortgage.
Right.
Traditionally, we look, I think around 740 is your top tier, right?
Correct.
That's your cream of the crop credit-wise. But with this product, and we understand that a lot of these first-time home buyers, especially if their income, they have to be income qualified, so they're going to be at the 80% area median income. It's a struggle, right? To build credit in the first place, to get credit, to do the right thing. So we will go down to a 600 credit score on this product. So when you think about it, that's just one more addition. Now you've got down to a 600 credit score, no mortgage insurance. We can layer with down payment assistance, below market interest rate. You keep talking like that, and it's like,
why would I not do this?
Why,
right?
if you qualify for that loan, you're going to take that loan.
Yes.
So we do have, and that's probably, when you look at a borrower from that perspective, okay, that's the best loan, that's the cream of the crop. Do you qualify for that? If they do, that's where we go. Now we get somebody else come in and say, well, I've got, I don't make as much money. My debt to income ratio is a little higher. It doesn't qualify that because it's a little more restrictive. What do I do there? Well, then we look at the next step. And then there's housing agencies that offer down payment assistance. And that's the key, is making sure you talk to somebody who's knowledgeable about not just their own portfolio product, but the third-party deep down payment assistance agencies, and then the housing agencies that also offer it. So if you don't qualify with the first one, what's the next step? Where can we take you next? And how can we get you in that house?
Yeah, and that's what you miss searching online, right? When you go talk to somebody, an expert like yourself or the other originators that we have, they've done all this work. They know what works, and they can find something that's going to be best for you. And I think that's so important. I know a lot of my friends and people that have, over the years, have went online and did the stuff, and then they realized, I'm like, Ben, you guys really do offer this? Like, what's the catch? And I'm like, no catch, man. It's working with an expert really, really does help with that. And you've talked a lot, Jamie, about low to moderate income families. One thing that I realized working closely with you over the years is low to moderate income doesn't necessarily mean low income.
No, not at all.
So can we break down, I know it's different market to market,
right?
But maybe we look at a couple examples of what income caps may qualify that people don't think that they would.
And I knew you were going to ask that.
Oh, perfect.
I brought some paperwork. But it is designed, it's a HUD income limits, right? At 80% area median income or less. And it is designed by household size, so the number of people in the household, and the geography where you live. But just to give a quick example, and this is what I tell a lot of people, even here at the bank, that I can't afford a house, I can't get into it. So a single person household, so somebody just out of school, been on their job for a couple of years, just getting started in their career, not making a whole lot of money, they can make up to $50,750 and still qualify.
Still a good amount of money.
That's that's that kind of income. That's a lot of entry level pay right there.
Absolutely.
And actually, that's even above some entry level pay. And then if you've got husband and wife, you're up to $58,000. You add your first child, you're up to $65,000. So it continues to grow up. The dollar amount goes up as the size of your family increases.
That's fantastic. And is that different than market to market as far as the dollar amounts, or is that?
Each market's going to be different.
Okay.
So so basically what it is it's 80% of that area's median income.
Yeah.
So, and then they take that down and break it down by household size.
So where it's more expensive in certain areas, there may be able to make more money.
The 80% AMI is going to be higher than what it is here.
I mean, that's, I think that's one thing that a lot of people don't realize. Like, well, I don't make enough. I make too much. Well, but I mean, if you get a single or just out of college, because I think that's one thing. So listeners, if have kids in college or getting ready to graduate, they're not making their prime earnings right after college, right? And if you're looking to buy a home early, get out of debt early, take advantage of this because it's a huge thing. So,
And sometimes it's a window of opportunity, right?
yes.
They've got that first career. They know they're going to be moving up in their, in their career, but they want to get that house first. Take advantage of what's out there while you're there, and quit paying $1,200 a month in rent.
Yeah, I was going to ask, what is the standard rate that you see for? Is it above the 1,000 now?
It's in most cases, yes.
Yeah, I remember back.
You can find cheaper housing.
Yeah,
but average you're going to be $1,000 or more.
I remember my old college days with 2 roommates. I think we had a 2-bedroom, 1 bath for like $600 a month. Yeah, and those days are gone. It was a nice apartment too.
Hard, yeah. They're few and far. They're out there, but they're very few and far between.
So let's mention that though. So advantages and disadvantages of renting versus home ownership. So like in renting, you can't modify the place really.
Right.
You can't really probably paint the walls. You may not be able to have a dog. You might hear your neighbors partying all night, right? There's a lot of things that you lose, and you're essentially just padding the pocket of somebody else, the landlord.
You're buying somebody else a house.
Exactly. So in becoming a homeowner, you build equity, which means, for those listeners that may not understand that, right? If you buy a property at $100,000 and you've paid on it and you've got the loan down to $80,000, you have a net worth of that $20,000. So if you sell that home for, and prices go up, right? When you sell a home, so let's say you sell for 120, you just made that additional 20 plus the 20 that you built in equity. So it's a way to make money.
Then, Ben, you add in the down payment assistance.
And the down payment assistance,
so you walk into the house with $20,000 in equity, and then it builds up. So now you're at $60,000.
Yes.
So that's truly how you build that generational wealth.
100%.
Because that's your first home. And I think the average is 7 years in your first home. Family gets bigger, you need a bigger place, your career takes off. That equity is what's buying your next house, right? It steps that up, and then you've got something that you're going to be able to leave to your kids.
Yeah,
someday.
and even for people as they get in their older years, if you don't want to think about people passing away, but that's a gift that you can then pass on to the next generation. I'm sure my kids would hopefully thank me if I gave them a house with no debt, right?
Absolutely.
But it is one of those things. But that's awesome. So are there any other programs that you want to touch point on, Jamie, from a federal standpoint? I know we touched on the Federal Home Loan Bank of Indianapolis. Is that the primary driver of other assistance outside of what banks offer?
It's huge, but it's seasonal, and the money goes fast, right?
Yes.
So when it's there, it's great. There's also state agencies, and every state that we do business also has a state agency that has a variety of different down payment products as well. Indiana Housing Community Development, we work very closely with them, and they've got conventional FHA products that offer up to 6% down payment. Some agencies, depending on what state you're in, some of them, they're deferred and they're forgivable. Some of them are pay off when you sell the house. So there's a whole lot of different products out there. And again, it's one of those where you basically sit down and you build a roadmap. This is where the borrower is. How do we get them from here to home ownership, and which product fits them that they qualify for?
Well, and one thing that our listeners may not be aware of is that we actually, in certain markets, have our own down payment assistance, right?
We do.
When did we launch this? Was it a couple years ago?
It's been a little over 3 years
Has
ago.
it been that long already?
Yeah,
wow.
absolutely.
So it's not everywhere, but it's important, though, if you are looking for a home and you found something, talk to your originator. You can, worst case is you ask them, they don't support in that community. But in a lot of our markets, it now is offering, the bank kicks in money from a down payment assistance as a way to further give additional income towards this down payment.
And it's a layering effect, right?
Yes.
So you talk about an old national down payment assistance that may be 3% of the purchase price up to $10,000 in certain markets, a little bit more in other markets, depending on where the house is located.
Yeah.
But you take that $10,000, you take the $20,000 from launch, then in Evansville, we have a HOPE program. If we can add, if you've got a third-party DPA provider outside of that, you can stack all. And what used to be $5,000 to $7,000 can be now $40,000 to $100,000.
I've got to ask you, what's the biggest amount that you've seen from a full down payment assistance before they bought the home?
We've got one we're working to approve, which will come in short time. They offer over $200,000 in down payment assistance. And we can layer hours on top of that and other folks as well. So
listeners, followers, it's no gimmick. Yeah. It's truly something that can help people.
And that's the biggest. Everybody's like, this is too good to be true. It's not going to happen. I've had conversations. I've had my loan officers, borrowers call me. It's like, you manage that team, right? They're telling me they're going to do this, right?
Yeah.
Like, yeah, they're going to do that. It's going, if you qualify for it, we're going to get it for you. And that's what we do. I mean, that's what my team does 100% is
Yeah.
work to see that they can get the absolute best deal for their borrowers. And it's a specialty because there's so much to know, right?
There is.
I've been with the bank 15 years. I used to know every single product. Now I've got area resident experts in every state because I can't keep up with that much from everywhere to go. But I know who to lean on when I need a case.
Exactly.
So, and it works, and we do have those products.
100%. So I think, a last question that I would have is, you do this every day. You've got a team, an army of people that do this every day. What advice would you give to a first-time buyer to navigate this process successfully? Obviously, step one is contacting somebody like yourself, right?
Absolutely. You don't know what you don't know until you sit down with somebody, right? Do you have credit? 18 years old. I've been working for a couple of years. I'm doing this. Did you build credit? Do you have credit? No, I don't have credit. Everybody says, I don't want to take out a credit card because it costs too much and I'll get into debt and I'll get that. There's a little bit of a myth there as well. Because
I'm a big fan of credit cards, by the way, if you use them right.
Use them right. That's a trick, right?
We'll do that in another class.
You have to use them right.
Yeah.
But there's also credit building products that we offer.
Yes.
We offer a CD
Believer
loan that they pay on for a year or 2 years that builds a CD that's got $1,000 or $2,000 when it's done. We report that payment to the credit bureau.
Absolutely.
Helps to build that. We have a prepaid credit card. You mail in $300. They give you a credit card. You make your payment on it every month. Now you have 2 trade loans there for 2 years. Now you build a credit score in the 700s.
Yeah.
So there's ways to do that. Not going into debt. Again, you're an expert on this. You pay it off in full each and every month.
Only buy stuff you would normally pay in cash and pay it off as soon as that statement generates.
Yes. I have 2 kids. I told them both, get the credit card, charge gas once a month, pay it off every month, and don't use it for anything else.
Yep.
That's what a debit card is for.
Absolutely.
So, and they both have 700 credit scores. I mean, and they're both going to be positioned when they're ready to buy a house.
I think, it's 35% of your credit score is made up of on-time payments and 30% on the, keeping the debt limit low or keeping it low to the debt limit, right? The utilization side. So if you do that correctly, every month charging gas, those two make up 65% of your score, and you're not going into debt. Your payment history is on time. So, and I think that's the key piece is don't wait until the last minute. Don't go shop on Zillow, find the house, go see Jamie and say, I have no credit, but I want to buy this house, right?
Exactly.
Meet early. If you need work on credit, that CD Believer loan's awesome, by the way.
It is. Absolutely.
And it takes some time, but the earlier you can start this process and the more confident you feel. I do a lot of work on emotions and people buying stuff when they're going through emotions, good or bad. But start the process early so that you feel prepared when that time is right.
Absolutely.
Awesome. Well, Jamie, I think we've covered some great things here. I wanted to bring you on because it is something out there that I frankly wish I would have known all this when I was younger. I've got kids growing up now. I work with a lot of, students, universities, people that want to be first-time buyers, and I thought this would be a good program to have, so I appreciate you coming on here. But before we finish, I want to do a thing that we call our lightning round questions. We're going to ask you 5 questions, kind of the top of the cuff. You just answer them, and we'll move through them pretty quickly, okay? So what would you say, Jamie, is the most valuable lesson that you've learned in your career so far?
That homeownership is available. It is affordable, and you can obtain it.
Yeah, I think that's awesome. Number 2, if you could master any skill personally, what would it be and why? It doesn't have to be banking related. We've had teleportation. We've had a lot of different things announced on our show.
I mean, if I could figure out how to get the right 6 numbers on the lottery number, that would probably be my first pick.
Wouldn't that be awesome?
Do teleportation, can I do this?
I guess you could, yeah.
Right?
Yeah, go back in time.
Oh, no, wow.
Yeah, no, it's fine. Oh, it sounds like that could be one of your answers, right?
Well, you ask my boss, I tell him every 2 weeks if I hit the right numbers,
Yeah.
No,
I may have a longer vacation.
Yeah, absolutely. But
like I need to work on my golf game. I wish I could outdrive some of these people. So that'd be a neat skill that I'd like to have.
If I could just pick it up and hit the ball, I think that'd be a plus right there.
There you go.
Right?
All right. So to get to know Jamie personally, what would you say is your go-to activity or hobby when Jamie needs to relax or unwind a little bit? You guys have a pool, right?
We do.
Is that still your go-to? I guess certain months. Yeah.
It's a little cold right now.
Yeah.
If you give me a couple months, that's where you'll find me.
Absolutely. Yeah, it's a nice pool too, so I love it. All right, so you've probably had a lot of influential people in your life. Anybody stand out as kind of the most influential that you've kind of worked with or encountered in your life?
Oh, there's probably been a ton of them. Just getting into this business, I've met so many great people. And we've known each other a long time. I
Yeah.
started in operations before I got into
Yep.
sales. And we had the sales manager at the time called me and said, "Hey, Jamie, we've got an opening coming up. It's going to be in community development. I know you know that piece. I know you got a passion for it. I think you'd be great for it." It was a competitive. I know there were several people applied for it, and I'm thankful that I ended up with the position. But there was a group of folks there that I think were as qualified, or maybe even better than I was. But it was Tanya Westerfield, and she called me.
Yeah, I remember
she
Tanya.
called me. I think you can do this, and I applied, and again, that's been 15 years
Yeah.
ago, and it's gone
So
from
she's
a
kind of
loan
one of your
officer
mentors.
position straight
Yeah.
up. Yeah.
It's all about building relationships,
Yeah.
right? 100%.
And I would say that the current management here,
Yeah.
Joel Van Elderen, the greatest supporter, Jim Ryan, the greatest supporter. The beautiful thing about Old National is when they see CRA, when they look at community development, it's not lip service.
Yeah.
They back up everything they talk about. And if they hadn't given me the tools to make my team successful, I don't know where it would be. So I owe it all
100%.
to that team.
I agree with you. I mean, we wouldn't have this podcast
Yeah.
without, I've been talking to Jim. He's like, yeah, let's do it. And they end up being a guest.
Yeah.
So it is one thing. Leadership really does step in, and having those relationships give you the power to do what you want to do. So
Absolutely.
you've done a great job. And then our last question, Jamie, what's one piece of advice you would give to your younger self from what you know now?
Call somebody else before you sign that mortgage because it was available then. I would have qualified for it.
Yeah.
But it wasn't widely known. And just to think when you bought your house, if you had an extra 20 grand in equity
Oh my
day
gosh.
one, it's knowledge. It's getting to know. And take your time and interview people. Talk to. Just because it's the first person you talk to doesn't mean it's the right person.
Yeah.
To me, and I sit down across the table from my borrowers, I'm like, first things first, you got to be comfortable with me. You got to be comfortable with your real estate agent. You got to be comfortable with everybody. I want to make sure that this is the smoothest transition, smoothest process that I can do for you. And I want you to be able to pick up the phone and say, "Hey, Jamie, I don't understand this," or "Hey, can we clarify this?" If I'd had that then, I'd have known a lot more.
I agree. It's building a trusted team, right?
Absolutely.
So make sure you have a mortgage originator on your trusted team. I will tell our followers, if you're in this boat, contact Jamie. If you're here locally, check out our website for an originator near you, because you find somebody you like and that you trust, right?
Absolutely.
And I know that I feel confident stating that with Old National, that is a good option, that you're going to find somebody you really like.
Without a doubt.
Well, Jamie, thank you so much for coming on the Real Life
Thank you
Finance
for having me.
podcast. It's a pleasure to have you. And thank you for all your knowledge and wisdom.
I appreciate it.
All right.
All real estate loan products are subject to full credit review and approval. Property insurance is required. Some restrictions may apply, and program conditions are subject to change without notice. Rates are subject to change daily. Down payment assistance programs are limited and subject to availability. Programs are available in the following eligible states and counties: Illinois in Cook, DuPage, Grundy, Kane, Kendall, Lake and Will, Michigan; in Kent and Washtenaw, Indiana; in Allen and Marion, Minnesota; in Hennepin and Ramsey, Kentucky; in Jefferson, Tennessee; in Cannon, Davison, Rutherford, Sumner, and Williamson, Wisconsin; in Dane and Milwaukee. Specific census tracts and other restrictions may apply. Program conditions are subject to change. Old National Bank reserves the right to discontinue programs at any time. The Old National Home Manager Program is available for first-time homebuyers. Borrowers are required to make a minimum contribution from their own funds toward the purchase of the home. All funds will be verified. No private mortgage insurance requirement, but additional program qualifications and requirements apply, including successful completion of a homebuyer education program certified by the Department of Housing and Urban Development HUD. The Home Ready Assistance Program is available for home purchase transactions only. Additional program qualifications and median income restrictions apply. Contact an Old National mortgage lender to learn more about the product and program details discussed in this episode.